Hey everyone, it's Jeremy McDonald, and if you follow me on social media, you'll see that I've been posting quite a bit about the interest rates going up and what's to come in the market, the cost of waiting, things along those lines. So today has been a especially difficult day when it comes to mortgage rates. We've been seeing reprices for the worst, which means that lenders are changing their rate sheets, increasing rates during the day, making rates higher. So what happened was this morning, the Fed released the consumer products index for inflation, and they were expecting it to be incredibly high at about 7.2%, but it came in at 7.5%, which is the highest level that we've seen in the US since 1982. So today alone, we've seen the mortgage-backed securities drop in their value, which means that interest rates go up by 83 basis points, which is 0.83 of 1%. That is a staggering raise. Factor in that back in November, the Fed stopped or started tapering back and buying mortgage-backed securities. Up to that point, they've been buying about 120 billion per month, and they've tapered back in buying those. And then with the expected, 5 or 6 rate hikes that we're going to see this year from the Fed, with the first coming in just a few weeks in March, and the general consensus is now leaning that because inflation is so high, the Fed wants to control that and wants to control the cost of living. So what they're going to do is raise the Fed funding rate. So it was kind of expected to be at about 1/4%, and now they're looking to raise it at probably 0.5%. So what does that mean for you if you're looking to refinance or buy a home? If you were looking to refinance and you've been waiting, thinking that rates were going to drop, I'm sorry to tell you that you have missed out on the lowest rates of mankind, something that we will probably never see again in our lifetime. The good news is rates are still historically lower. We're not at 5, we're not at 6, and we're definitely not in the teens that we were back in the 80s. But they're rising quite a bit very quickly. So if refinancing is something that you're interested in, it's urgent that you do it now. If you're purchasing a home, it's urgent that you make serious offers, that you really discuss with your real estate agent the best ways to get your home under contract, and that we do everything possible to make your offer as desirable as possible to sellers. Because for every 1/4% that interest rates rise, that's going to drop what you qualify for by about $7,000. So that means that if you were qualified to buy a $250,000 home and interest rates go up 1/4%, now it's going to cost you the same amount of money per month because your approval is based on the monthly payment, not the price of the home. So instead of buying a $250,000 home, you're going to buy a $243,000 home, and it's going to cost you the same amount per month. Now, if we see a 0.5% rise in interest rates, that's going to drop you by $14,000. So instead of 250, now we're talking about 236,000. So if you don't have a sense of urgency, you need to have that sense of urgency. When it comes to new construction and trying to build a home that's going to take 8 or 9 months, you need to realize that there's going to be probably a minimum of 4 rate increases from the Fed by the time that house is at a point to where that the builder's lender is going to be able to lock that interest rate. So what you qualify for today and what you qualify for in 8 months is going to be dramatically different. So if that's the route you're going, you cannot max out your approval. You need to go quite a bit underneath of it. So there's a lot of different things that we can do, like the Heroes Backed Cash Offer Program, to make your contract more desirable to sellers, to accept it. So the time is definitely now. If you're thinking that the market is going to drop, that prices are going to drop, you have not done your homework whatsoever. There's quite a few reasons of why not rates, but values have been going up. One of the main ones is the dramatic supply issue that we have. There's just not enough homes for the people that want to buy them. So it doesn't matter how much interest rates go up, because those houses are not just going to go down in value because there's not enough houses to be sold. There's more people trying to buy than there are selling. So from a supply and demand issue, that's one major issue. Another issue is that the new construction starts in the past decade is the lowest point that it's been in over 50 years. So there's not enough new construction being done to meet the demand that's there. Also, your average first-time buyer is about 33 years old. And right now we're seeing that from 1987 through about 1993, there's about a 12% increase in birth rates compared to, earlier in the 80s. So there's more people coming into the market as first-time buyers. So there's more competition than ever. There's less homes than ever. And we still have low interest rates, even though they're not the lowest that they've ever been in the history of mankind, like they were a few months ago. So this isn't this isn't 2 decades ago now. This isn't 2008 when it was like, hey, you have a pulse, you got a 580 credit score, cool, I'll give you 100% financing. You can tell me how much money you make. I don't have to verify it. And I mean, the loans that we did back then were insane. Looking back at them, they should have never happened. So back then you had people that worked as bartenders and waitresses, that worked underneath the table that had 4 or 5 rental properties because they never had to put any money down. Those are the reasons that the housing market collapsed. It wasn't because the houses were just so overvalued. It's because there were so many people that had mortgages on houses that should have never had a mortgage on those houses. So it's not like that today. You can't just go in and get any house that you want. There's a very real qualification process, and everything has to be documented. Everything has to be verified. So I cannot stress enough that values will continue to go up. You're looking at Northeast Florida Association of Realtors, the National Association of Realtors, Zillow, Trulia. Everyone's expecting 20+% appreciation in 2022. Plus, with interest rates rising, that's just going to mean that either A, you're going to pay a lot more for the same house, or B, you're going to get a lot less house for the same amount of money. So this is not going to change. This is not going to reverse course. We're not going to go back into the lowest rates that we've seen ever. Okay. That's something I really, really want to stress. So everyone that's waited around like, hey, okay, you shouldn't have waited, but you did. There's nothing you can do about it. Take advantage. Buy now. Take advantage of getting the 20% appreciation this year and the appreciation that you're going to get to see in the years coming before things kind of go back to a more 4.5% per year stable appreciation. So it's critical that you act now. It's critical that now is not the time that you try to lowball, offers when you're putting in offers on home. You have to do everything you possibly can to get the home under contract. So if you have any questions about the market, if you want to get pre-approved, see what you can qualify for. If you got qualified or pre-approved a month ago, 2 months ago, or 6 months ago, now it will be different. You will qualify for less. Or if you weren't maxing out your debt ratio, you're going to be paying a lot more money for the same house. So I'm always available. Please feel free to reach out. Me and my team are here to help you. And again, I cannot stress enough how important it is that you take this seriously and that you act now before it costs you more money, because that is exactly what will happen. So you can reach me at 904-442-3213. I do hope that you have a great day. I hope that this was informational for you. And if you have any questions, please let me know. Thank you.